Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at two consumer-oriented stocks on the Trinidad and Tobago Stock Exchange. We're talking, of course, about Prestige Holdings as well as Angostura Holdings Limited. Now, both groups have reported stable to improved earnings. Let's take a look at what would have occurred and what investors might expect in the coming quarters ahead. Turning firstly to Prestige Holdings, well, the group reported a diluted earnings per share figure of 16 cents per share, which was a 25.6% increase from the odd 13 cents per share recorded in that prior comparable first quarter of 2023. Total revenues were up 10.3% from 309 million to just about 341 odd million. Operating profits came in 23.5% ahead of its first quarter 2023 results, from 16.1 million to just under $20 million. Overall profits attributable to owners of the stock or the parent company increased at 26.3% from 7.8 million to 9.9 million in that first quarter. So certainly continued positive momentum and trends for Prestige Holdings investors. When we take a look at revenue trends for PHL, we can see that revenue continues to be trending upward, of course, with that 10.3% increase in that first quarter of 2024, accompanying or following a very pronounced 25.6% increase in the prior comparable quarter, where $309 million in revenue were generated. So certainly new store openings as well as increases to prices of its product portfolio have been helping Prestige Holdings Limited to continue with that positive revenue trajectory. When we take a look at Prestige's or PHL's ability to convert every dollar of revenue into profit, we can see that that has also been improving. Gross profit margins improved from 30.9% in that prior comparable quarter to 33.9% in the first quarter of 2024. Ultimately, that profit before tax improving significantly from 3.7% in that first quarter of 2023 to 4.5% in that first quarter of 2024, suggesting that the earnings trajectory, the earnings momentum of PHL is not going to be as reliant on increases in revenue as PHL moves forward on the basis that it can sustain or continue to sustain that improvement in its PBT or profit before tax margin increases. So at a price of $11.36, Prestige is trading, or PHL is trading at that price earnings ratio of 12.2 times, which is below the sector average of 16.6 times and offers investors a fairly generous dividend yield for the sector of 4% compared to the sector average of 3.4%, again, accompanied with fairly significant growth in both revenues and profits. So with revenue growth in mind, those are increasing margins or higher margins, continued new restaurant openings, particularly with the Starbucks franchise, not just in Trinidad and Tobago, but also in the rapidly developing economy of Guyana, as well as those attractive valuations. Bourse is going to maintain its overweight rating on Prestige Holdings Limited for the time being. Turning very quickly to Angostura Holdings Limited, well, the group would have recorded a fairly stable earnings per share, no major changes of 10 cents per share in the first quarter of 2024 compared to the same 10 cents per share in the first quarter of 2023, roughly. Revenues, however, were down just about 4.8% from 197.4 million to just under 188 million. Contributing to this revenue decline, according to the group, was some production challenges or maintenance challenges with respect to its Angostura Chill line, which contributed to a decline in its Angostura Chill-related segment revenue. Gross profits, however, also declined just about 9.7% from 105.5 million to 95.2 million. Ultimately, profits for the period declined a very modest 2.5% rather, from 21.2 million to 20.6 million. Now, when we take a look at Angostura's revenue trends, we can see that this is the second consecutive first quarter of a revenue decline for the group. In the first quarter of 2023, our revenues declined a fairly modest 1%, and this has been followed by that more pronounced 4.8% decline in revenue to 188 odd million in that first quarter of 2024. The group would have indicated that these conditions, particularly related to the Angostura Chill line, would or should be normalized from the third quarter moving ahead. Now, in terms of profitability margins, one would expect that AHL's profitability margins would have come under pressure to some extent, given that those revenue challenges as well. We can see that the gross profit margin would have fallen to just about 50.7% from 53.4%, and ultimately profit after tax margin, surprisingly relatively stable, actually a modest increase from 10.7% to 11 odd percent. So certainly some cost containment initiatives accompanying overall the decline in revenue to keep profitability margins relatively robust and maintain at least its earnings for that first quarter period of 2024. When we take a look at AHL from an investor or shareholder perspective or value perspective, we can see that on a trailing basis, its earnings per share would have increased modestly from 67 cents in that prior first quarter 2023 to 74 cents. However, its price to earnings ratio has come down a bit compared to the first quarter of 2023, suggesting that it is a little bit more reasonable in terms of valuations compared to its own historical multiples back in the first quarter of 2023. So at a price of $20.10, Angostura is trading at a price to earnings ratio, as mentioned, of 27.2 times, which is more than double the sector average of 12.5 times, and offers investors a fairly modest dividend yield of 1.9% compared to the sector average of 2.7 odd percent. So with those revenue headwinds in the near term, at least in mind, that a bit of margin volatility, although its profit after tax margins have improved a bit, and those elevated or continued elevated valuations, Bourse is maintaining its underweight rating on Angostura Holdings Limited for the time being. But that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.